Okay, it's 9 o'clock now, so we will begin. Hello, everybody. Welcome. This is our third webcast of the year, final one for 2020. My name is Liliana Wong, and I work at Origin Royalties in marketing and investor relations. For those of you who are hearing about Origin for the first time, we are an organic royalty generator. We explore for precious and base metals such as copper in Western North America. And when a discovery is made, our joint venture partners have the right to purchase a project from us in exchange for a royalty or cash or a minority interest. And that's how we generate our royalties organically. And we focus on Western North America, specifically Nevada and the States, BC, Northwestern Territories, and in Mexico. Today, we will be discussing copper. In the last two webcasts, we brought our attention to gold since it's usually hot in the media, but we thought it would be a good discussion to talk about copper since in recent months, the price has climbed significantly. So we wanted to discuss why that may be and what to expect for the near future. Our speakers today are Ryan Long, Analyst at Proactive Investors, and Joe Mazumdar, joining us a second time, who is an analyst and editor at Exploration Insights.
I mean, so people understand who don't understand the copper market, like, copper comes from mines, underground, open pit mines. There are different ways of processing it. When I worked at Phelps Dodge, we had a lot more of oxide copper. So these are the solvent extraction electrowinning projects that you could actually produce copper cathode at site. But since
where was that? Where were the projects?
Oh, they were all over the world. They were in Peru, Chile, and Arizona. But what people got to realize that those projects that could produce cathode are, geologically, they're on the surface of the earth, and then as you go deeper they turn into sulfide, and the majority of deposits now are these sulfide deposits that mines produce copper that grades, let's say 0.5% or less from an open pit and over 1% hopefully from an underground mine, and then they produce what's a copper concentrate. And the copper concentrate is actually what they sell. They don't sell refined copper anymore. And so when you start understanding the supply chain, then you understand that you produce an intermediate product, and then you get imposed upon treatment and refining charges by the smelter. That's the intermediate buyer of your product. And then the smelter takes it, refines it, and produces copper cathode, which is basically the end product. So in the end, if you're looking at equities, you're looking at a company that mostly actually produces copper concentrates. So to understand that market, you'd also have to understand that intermediate market of copper concentrates and how that works as well, because your exposure is a discount to the copper price, because what they call the TCRCs could be like 20-30% of the price of the copper, because most mining companies don't have smelting and refining.
I think a lot of people actually know that, so it's probably a good topic for us to cover also in a future blog.
Yeah, and I mean, Phelps Dodge had a smelter and refinery, but most of those smelters and refineries have moved to places like China, and the majority of the smelting is done in Asia. Wow.
Just the recent U.S. election, and with Biden becoming president in the next month, do you see that affecting copper prices in any way in the near future?
Well, there is a positive and a negative potentially. I mean, definitely from a permitting standpoint, it may be, may take longer for people to permit projects under a Biden administration. But if they actually invest more money and generate more stimulus packages for infrastructure, that would probably drive more demand for copper in the end. So that would probably be a boon for price regardless, because it might constrain supply as well as increase demand. But if you're in a mining equity that's building a project in some parts of the states where it's under the Bureau of Land Management or the Forestry Service, some of those permits may take longer than before. But saying that, I mean, the Pebble project in Alaska that didn't get its final permit was all during the Trump administration. You never know with respect to and what doesn't work. What I find is if there's a significant local opposition to the project, it doesn't matter who's in charge. A lot of those projects will never get off the ground. On the supply side, like we said, copper mining companies produce copper concentrates predominantly, and they send it mostly to Asia. And right now, partly because of COVID, probably predominantly because of COVID-19. As COVID-19 went from China, which impacted the demand for copper in the first quarter, and that's when we saw copper drop to about $2, $2.10. It came up after that because China was also the first one to come back. And as that came back, copper prices started lifting, and Ryan could talk about that, up to, I think now $3.55 per pound. As the COVID-19 pandemic moved to the Americas, what it did was not only impact the demand from the Americas, from the US, but also impacted supply. So the most significant producer of copper in the world is Chile. And then by a wide margin, the second one is Peru, followed by, I believe, by the US and Australia and that. But Peru and Chile both were significantly negatively impacted by COVID-19. So not only did that impact production, but it also impacted projects that were in development. Because development has a lot of people on site at the same time, and trying to maintain social distancing and all the new protocols at that time were difficult. So, and then there's also travel restrictions, and so that impacted exploration as well for companies that are exploring in remote places because they don't want to bring, or the locals don't want them to bring COVID into their village or town. So that's been impacting a lot of Latin America, and especially the countries that we could talk about in the copper market, like Peru and Chile. So that was a positive for copper prices, because as we were getting a resurging China, we were getting a contraction in supply that some estimate might be 2% of a contraction based on the production from last year.
We got a question about that. Now that Peru and Chile are back into production again for the last few months, do you think they're going to be able to make up for the lost time earlier this year?
Well, the thing is that the mined production is still there to mine. The problem is timing with respect to how fast it gets out. Mm-hmm. And not only do we have the issues with, probably a less efficient production schedule because of the application of the COVID-19 protocols, but also like in Peru, we're also dealing with a little bit of political upheaval because they have new elections. They've had 3 presidents in a couple of months, and now they're going to have another presidential election in April. So there's a bit of geopolitical uncertainty as well in Peru. And Peru's was, I believe, the year before last, I think in 2019, the biggest exporter of copper into China. It actually beat Chile. So that's an important part of the puzzle, and that's why we're seeing probably the fact that copper cathode premiums in China are high again, and we're seeing those treatment and refining charges that I was talking about go down, and so that's the reverse of what you see. Like when the TCRCs, as we call them, are really high, that means there's a lot of copper concentrate, and you can charge whatever you want, and these guys will just give you copper concentrates. But when there's very little copper concentrates, you lower your price to attract more copper concentrates to your smelter. And those TCRCs have come down, those charges, because the concentrate market is getting tighter.
We also actually have another question on that topic. it says what countries or economies affect copper prices the most. So would you say then it would be Peru and Chile because of the supply side, or is it also China on the demand side?
Well, yeah, that's the way you got to look at it. So from the demand side, the big pull is definitely China. But on the edge, so if we look at the near term, move in copper price, that's China driven on the demand side. And then on the supply side, it's being driven by the constraints in production by a lot of big producers in Latin America. But then in the medium term, what we're probably going to see is, we're seeing a lot of countries and companies talk about being carbon neutral by 2050. And then how do we get there? And so in the medium to long term, copper becomes potentially a less of a China story, still significant, but more of a global story with respect to reducing global greenhouse gas emissions. And that's not only the lithium that people are looking for, the cobalt, the graphite, and the nickel, but to create these cars, to create this electrification, you need a lot of copper wiring. And Ryan, unfortunately, he had a really good slide on showing the loading required in cars and that once you talk about electric vehicles. And so medium to long term, it's going to be about the penetration of the electric vehicles that will drive that incremental growth in outside of China as well. So those, there's the different timing, short, medium, long term, and also supply and demand. And on the demand, on the supply side, the issue is that there's just not a lot of projects out there. And so, the S&P market global market intelligence put like 2012 was the peak of copper exploration budgets, about 4.7 billion. So now we're about 60% lower at about 1.7 billion, which is the estimate for 2020. Like most of the exploration is done by big companies. So the juniors that maybe your subscribers are interested in getting exposure to, there's less of them exploring for copper than they are for gold, just because it's easier, it's cheaper, and copper is a bigger target, needs more drilling, and a lot of the drilling can be very deep, and it could be a lot of it, obviously, yeah. And so we see a lot less junior companies involved in it. But saying that, I mean, if you can get a good junior company with a good project, that's basically what you want to hold on to if you're looking at the juniors. But obviously, when copper prices take off, just like in gold prices or any commodity, it's the producers, the levered producers like your Freeport, your First Quantum, those kind of companies that would be the first ones to take off. But what I see is a problem with respect to filling a lot of these deficits going forward with the projects that are out there, because there's not enough projects out there. So, it could take 7 to 10 years from, discovering a project to actually getting into production. And a good example of that is this Winu copper project that Rio Tinto discovered in Western Australia. So they put together a resource of about 500 million tons of about 0.45% copper equivalent that looks open pittable in Western Australia. And so they discovered this in 2016. They drilled about 125,000 meters on it. And now they're talking about putting it into production by 2023, which is fast for Rio Tinto. And that roughly, if it works out, is 7 years. But when I worked as a market analyst for Phelps Dodge, we had that Superior Arizona project, which is this massive underground project that was a joint venture from Rio Tinto and BHP, but I think Rio's the operator now. We had that coming into production, or I had that coming into production in 2010. We're now at 2020. It's still not in production. So when people forecast, they have to put in the probability that these projects are going to come in. But even if we put 100% of those projects in, there's still probably not enough to satiate the demand if you assume a decent penetration of electric vehicles and a rebound in what China is trying to do. Because China's already talked about their new 5-year plan. And one of the big things they've talked about is basically urbanization. So their urbanization rate was 60%. They want to get it to 80, like Western countries. So if they can execute that, that would be a strong pull on industrial commodities like copper.
Why do you think it takes that long? Is it the permitting stage, or is it the?
Oh, it just does. It just does. Between technical studies, between drilling, between financing, between permitting, and all that, there's no way it can come in faster than that. A gold heap leach project, you could do really quickly. It's small. You can drill it out really quickly. You mine it. You stick it on a heap. Put cyanide on it. You're done. This is much bigger throughputs, much bigger footprints that require a lot more study and a lot more work, just to get it to a construction decision. And that's why a lot of juniors don't do it, is because there's a lot of money to be spent before you actually get to a project with a feasibility study stage project. Whereas gold, you can do that much quicker and cheaper.
So now that the price of copper has climbed, as we mentioned in recent months, do you think we're going to see more exploration?
Yes, we probably will, but we might see more of these joint ventures. We might see, because also, you saw Newmont do a joint venture. I mean, buy a portion of the, I can't remember what it's called, Galore Creek project in northern BC. And these projects are like 5 to 7 billion capital investments for companies. And some of these companies want to mitigate risk by having a big partner as well. So we might see a lot more joint ventures by big companies to build these projects because of the financing and funding required. But definitely investors are paying attention. People who are building and are making the plans for the future are paying attention to the requirement for industrial commodities, and copper does fit with respect to being required. And what we should see is more projects coming, and more exploration generating more projects, hopefully. Like Vale, they drilled out a project called the Onto project in Indonesia, which they, I believe, started drilling back in the early 2000s and now they've put together a resource of over 1 billion tons of over 1% copper equivalent there. So these projects are coming in, but still, that project in itself will probably take another 5 to 10 years before it could actually be in production, if at all. So, but what we're not seeing is a lot of these development projects, like right now, that have to be at feasibility study stage to actually come into production in 5 years. We don't see a lot of those right now. And that's a boon for the copper price. And that's why people forecast a lot of deficits in the next 2 to 3 years.
Yes, we can hear you, Ryan. Let's go forward with your slides.
I'm sure Joe's already mentioned this, but the copper price today is around $7,700 a ton, which is its highest level in 8 years. Now, what's caught a lot of people on the back foot is the rapidity and the scale of this. So the copper price has actually risen over 60% in just 7 months. And many analysts, myself included, think we could be at the beginnings of a boom for the copper market. Now, whether this boom will be of the scale we saw back in 2009 and 2011, when the copper price rose by around 256%, is a matter for debate. But I think it's a very exciting time for anyone to be developing a copper project right now. The recent rise we've seen in the copper price has been driven by a weak US dollar and also dwindling inventories. The LME copper reserve is now down 60% from its April 2018 highs, and the LME is the largest repository of copper stocks globally. So it's a very good indicator as to the health of the copper market. Also boosting the copper price in the near term is the fact that we're much closer to a rollout of a COVID-19 vaccine, which should result in an increase in industrial activity, which is always good for copper. In the midterm, on the demand side, it's all about China. China accounts for over 50% of global demand and it imports around 80% of its copper. China's made a fairly good recovery from the pandemic. It's forecast to be the only country to actually grow in economic terms in 2020. But they've already managed to create 10 million jobs this year. They're investing in infrastructure. The government's announced a 20% increase in the state power grid, which is around 450 billion renminbi. And there are 25 major cities and provinces that have pledged to increase expenditure on infrastructure by 50 trillion renminbi. And these are projects from everything from 5G networks to big data centers, EV charging hubs, subways, high-speed rail stations. And all of this is going to require additional copper. And where China is leading us, I think other economies are going to follow in order to reduce high unemployment levels and kickstart economies which are currently in recession. We're going to need more industrial expense. Now, in the longer term, on the demand side for copper, it's mainly going to be driven by this. Well, potentially not this, but perhaps the great-great-grandchild of this, which looks a bit more like this. So the average electric vehicle motor contains more than 1 mile of copper wire, a mile. And the electricity generated by this motor is then transported across the vehicle to the battery, the drive system, and all the other electronics by more copper wire. And then the battery itself probably contains around 8% copper. So an average EV can contain around 280% more copper than its combustion-powered counterpart, which is a huge amount. Now, the International Energy Agency, or IEA, expect the stock of electric vehicles to increase from 7.2 million in 2019 to somewhere between 140 and 245 million units by 2030. Now that's an increase of between 1,800% and 3,300%. And when you think that each of these additional units is using 280% more copper than a traditional vehicle, that is a huge uptick in demand for copper. And as a result, I hope you can see why I'm bullish about copper, because I think it's got a great future. And the Biden administration's movement towards away from a fossil fuel powered economy to a more renewable powered economy is bound to be good for copper as well, simply because wind and solar are going to use a lot of copper.
I usually avoid development plays, but since I see a paucity of development projects in copper, I did, buy into a development play in Alaska, Trilogy Metals. That's got a joint venture with South 32 to build the Arctic deposit, which is a volcanogenic massive sulfide deposit in Alaska. They weren't able to do any work this year on that project because of COVID-19, so the share price has been rather stagnant. But I'm looking forward to more news flow going into next year as they'll be getting to site earlier in the season. So I approach it at all stages because I think copper requires not only development projects, but also requires exploration. And so I've also got investment in a grassroots explorer in Peru, Hanan Metals. That's exploring for sediment-hosted copper in the sub-Andean basins of Peru, and then I've got another advanced exploration one in northern Peru called Regulus Resources, which is building out a significant resource around a current operation, and it's run by people that previously worked for major companies and previously sold an asset to First Quantum. And so, so in terms of that, I try to get exposure not only to different geographies, but also to different stages. And again, it all reverts down to people, especially on the exploration side, because you have to trust that they know what they're doing. Once you get in the development stage, when funding becomes an issue, to have a partner like Trilogy does with South 32, that's where I get a lot of my risk mitigation from, because South 32 was a spin out of BHP that didn't have a lot of copper assets. So copper is something that they're definitely interested in making a bigger part of their portfolio.
And would you advise people to also add maybe some of the majors to their portfolio, or are they overpriced?
It's not something we tend to do at Exploration Insights, but yes, I mean, if you're looking for leverage, like I said before, like with the Freeports, the First Quantums that offer pure leverage to copper, it's hard to get the leverage from diversified miners like Rio Tinto or BHP because they make more of their money from iron ore and other things. If you're looking for pure plays, if you actually do look at the production, then you'll have to look at where the production is coming from, to make sure that they can actually produce there, and there's no other issues happening with their production. Because as I said, there's operators that are having issues in Peru and Chile, so in the end, the higher copper price might just offset their reduction in production rather than being a bigger boon. But because of the positive copper sentiment, I'm sure that they're seeing a lot more trading, a lot more liquidity. And we could also see that in the commitment of traders report for copper futures and on the COMEX, that's been going up since the summer. So that's net long. So that's a positive for copper as well. So hedge funds and everyone's interested in copper.
It sounds like you prefer projects that are in North and South America then. Is that right?
Yeah, I mean, if I could pick up a nice one in Australia as well, I would do that. I used to own Ivanhoe as well in the DRC, which is a spectacular deposit, but it seems like Western countries are less interested in the DRC, and the Chinese companies are basically taking over ownership of assets there, because we saw Freeport sell their Tenke project, I believe back in 2016, to China Moly, and now they just sold another satellite project near Tenke to the same Chinese company, as Freeport sort of divesting itself of the DRC. So it all depends on the investors, what risk they're willing to take on with respect to geopolitical risk. But definitely the DRC, if it wasn't for, the geopolitical environment, that would be hands down one of the best environments for a number of different metals.
I think jurisdiction is something you can't necessarily take at face value as well. We saw a week ago, 2 weeks ago, that Northern Dynasty got a negative record of decision on the Pebble project. And that's the largest copper project in the US. So, well, in the world, but it's located in the US. So jurisdiction itself, you've got to look at regional areas as well as sort of country level, and look at historical precedent. Because if you're looking to move a project into production in an area that hasn't seen a lot of development before, then it's going to be a lot harder than an area where you've seen lots of mines built and an established procedure to follow.
Mm-hmm. And Ryan, how about you? What would you advise new investors that are just looking at adding some copper into their portfolios?
I think there's a number of good plays out there. Something like Sandfire Resources, where they've already have an established resource and they can build a mine around that high grade resource. They got 60 million tons at the T3 deposit. And then earlier this month, they announced another discovery at I think it was the A4 deposit, which is another 6 million tons. And they've got a whole series of targets where they can build up additional resources to form a production hub around a central deposit. And sometimes small can be beautiful with copper deposits. With big projects, you do get economies of scale, which means lower costs. But for a small project can be easy to fund with lower rates of dilution, and it can also have significant returns for investors.
So just like we take the US dollar and interest rate levels as part of our guidelines on how gold prices may move, what should investors consider as pointers for the price moves in copper?
Sorry, pointers. Oh, like what you should look out for.
What on the news should we look out for? I guess news around infrastructure and China growth.
Yeah, you'd have different things driving demand and supply. And so from the demand side, like you saw the Chinese put out their new 5-year plan, and that involves a lot more urbanization, electrification and all that, which is a boon for copper in the end. And then you see that reflected in the fact that, Shanghai, futures exchange warehouse inventories have climbed down again as even the government stockpiling again for that 5-year plan. So we know China's really bullish on copper, and you see that a state-owned company buy an asset in the DRC, so you know that they're bullish on copper. And now, are we going to see that in other places? The EV penetration, infrastructure rebuilds in these different countries. But I've heard about infrastructure rebuilds in the U.S. for 20 years. So, I take that with a grain of salt with respect to their ability to actually do it. But there's nothing, if people want to get to 2050 carbon neutral and they need electrification in that, copper's got to play a part. So in terms of the medium to long term, you've got that. And then watch for indications of, cuts in production. Like I remember in 2004-5, before copper actually went from 55 cents and shot up to, $2 and onwards, it was a very tight market, which is what we're seeing now, and you can see that by the TCRCs, you could see that by cathode premiums in China. And then you had a disruption. Like back then it was Grasberg that had a big, open pit slide that took off 500,000 tons or something like that of copper off the market. That just made copper go to the moon. COVID's that impact right now, but it's not a single impact. It's something that's dragging out over a longer period of time. That copper, again, is not going away. It's just not filling those deficits anymore, and that's the issue. And then if you're looking at the exploration side, nobody's exploring. That's got to come up. But then understand that if somebody discovers something, it's going to be 7 to 10 years before it actually makes into production.
Exactly.
Yeah. And so how many projects are up there to fill this deficit? There's not a lot.
Maybe even looking out for news around a second wave hitting Peru and Chile, maybe future lockdowns, right?
Yeah, that would impact production, and that would make the producers look better. But it might impact somebody who's developing a project there that you might own equity of, so it could come back to bite you on that side. So, geopolitical risk or whatever is important with respect to COVID as well.
Ryan, do you want to add anything?
Yeah, I think it's really, for me, it's all about China. China's 51% of consumption, and the Americas as a whole only really counts for 12%. So I think the US is much less significant, but it sits within the Americas, so it's a much less significant number. So I would always look to China and what the Chinese are doing, because I think that's going to be a big leading indicator.
I don't know if any of our people in the audience may be wondering, is China producing copper as well?
From mines? Yeah, they do produce copper, but they don't produce what we in the West would call economic copper. But as Ryan pointed out, they import most of it. But as they built up the most smelter capacity, they don't want copper cathode, they want copper concentrate. And then they produce refined copper. But they can't produce refined copper from their mines to satisfy their needs or their growth. They need to import, and that's from Chile, that's from Peru, that's from Australia, that's from wherever. Most of the smelting capacity in the world is in Asia between Japan and China. There's hardly any smelting capacity in the Americas. So when people talk about, I've got this copper asset, look, it's in the States, and the States wants the copper being, homegrown and reducing supply chain, and then, hey, we own it and it's coming from here. That's not the case, because they're not smelting and refining it in the States. They're smelting and refining in Japan or, maybe Korea, but mostly in China. And then they have to come back and buy the cathode.
Do you think we'll see a move, Joe, to more downstreamization within the mining industry, particularly for copper?
I think in the end, I don't know if we're going to see the same things that we're seeing with nickel, lithium, and some of these other where people want to get that value add, where they want the premium on the LME price. I don't know, because copper is much more fungible than a lot of the nickel products or any of these other products. But there might be, I think, in the future, some desire to have that smelting capacity in the Americas. That way that you have a project in the Americas and you can actually make cathode there and keep it in that hemisphere, as opposed to always going to Asia. So that what COVID has taught some governments is supply chain is important, and they don't want to be, require one country or two countries to generate all a certain critical element. Copper's not on the critical element side yet, but people might wonder if they start introducing infrastructure expenditures and wonder, okay, where are we getting the copper from? And then somebody says, oh, half of that's coming from China. And they go, okay, we're gonna have to change that. But right now they don't have another avenue. I mean, I'm not saying it all has to come from China, it can come from Japan and that, but if they want to diversify and have some come locally in the Americas, they're going to have to start permitting these smelters that nobody wants because, they don't want all the emissions and all that sort of stuff. But in the end, that might be where we head. Nobody in the States is being asked or forced to build smelters like they are in Indonesia because they want the value add. It might not be the value add that drives people to build those. It might be trying to shorten some of these supply chains.
And do you think that's got to come from government down? It's got to be a top-down policy.
Yeah, it's got to be a top-down policy that makes economic sense to the miner, or to the smelter, that this is actually a business that I want to be in. Because most of the smelters and refineries in the States, and, I've been to some of them where, Phelps Dodge, you still had the one in El Paso, but we're right beside the mine, which made absolute sense because, in Bingham as well, is because you don't want to ship a copper concentrate, a bulk commodity, when you can ship copper cathode. And also back then they had a lot more solvent extraction, electric winning projects that they produced cathode there, and so, but now that's not available anymore. Like a big deposit like Morenci, which was all SXEW, is now copper concentrate, so they're not producing cathode anymore. And that's the same case for Cerro Verde, for El Abra. A lot of these mines that started off being SXEW, the copper price went up and now sulfide is economic, but that sulfide is a concentrate and that has to go to Asia. It can't come into the States anymore. I think I saw a question about what's Origin got to do with copper. I mean, again, like you were saying, they were a prospect and royalty generator now, and they've got projects in BC, in northern BC, that they joint venture that are copper assets. So that's basically their connection to copper.
Mm-hmm. Some copper exposure there.
Yeah.
Okay, well, we are just 3 minutes past our time. So thank you both for joining. I'm glad that we were able to get those bugs fixed and we were able to have a good discussion on copper. If anybody has any further questions, please feel free to email us, Liliana at originroyalties.com, and I will be sharing this recording and the highlights at the end of this week. Thank you again, Ryan and Joe, and have a great rest of the week.
Thank you very much.